Stock investing, a beginner's guide with step-by-step instructions. When done correctly, stock investment is one of the best methods to create long-term wealth. To help you make sure you're investing money in the stock market properly, here is a step-by-step tutorial. 1. Choose your investing strategy. How to begin investing in stocks should be the first thing you think about. While some investors choose to buy specific equities, others choose a more passive strategy. The various stock market investment options include individual stocks. Only if you have the time and motivation to thoroughly examine and continuously assess stocks can you invest in individual equities. A wise and persistent investor has a good chance of outperforming the market over time. Index funds. You have the option to invest in index funds, which follow stock indices like the S&P 500, in addition to purchasing individual equities. The fees of index funds are often far cheaper, and they almost always reflect the long-term performance of the underlying indices. The S&P 500 has generated total returns that have averaged 10% over time, and performance like this can generate sizable wealth over time. Once you decide what sort of security you want to invest in, it's time to make a plan. A trade plan can help you master the emotional side of investing as you just stick to your plan. 2. Set a budget for your stock investment. Let's start by discussing the capital you shouldn't put into stocks. Money that you could need within the next 5 years, at the very least, should not be invested in the stock market. Even while the stock market will almost surely increase in value over the long term, there is just too much uncertainty in stock prices right now. In fact, a decrease of 20% in any given year is not unusual. During the COVID-19 pandemic in 2020, the market fell by more than 40% before quickly rising to an all-time high. Asset management. Let's now discuss what to do with your investable funds, or the money that you are likely not going to need in the upcoming 5 years. Asset allocation is a notion that applies to this situation, and several variables are involved. Your age, unique risk tolerance, and investment goals are all very important factors. Let's start with your age. The general view is that stocks eventually lose appeal as you age as a place to invest your money. If you're young, you have decades to ride out any market ups and downs, but if you're retired and dependent on your investment income, this isn't the case. Here is a brief guideline that can help you approximate your asset allocation. Take your age and subtract it from 110. This is roughly how much of your investable funds you should put into equities. This includes mutual funds and ETFs that are stock-based. Bonds or high-yield CDs should make up the remainder of your portfolio. This ratio can then be changed based on your personal risk tolerance. Let's say, for example, that you are 40 years old. According to this approach, you should invest 70% of your investable funds in equities and the remaining 30% in fixed income. 3. Open an investment account. Create an investment account. All the stock investing advice for beginners is useless if you don't have a mechanism to purchase stocks. You will want a particular kind of account known as a brokerage account to do this. Companies like TD Ameritrade, Free Trade, Interactive Brokers, and many others provide these accounts. Opening a brokerage account is typically simple, but there are a few factors to take into account before selecting a specific broker. Type of account first. Decide what kind of brokerage account you require. This involves selecting between a basic brokerage account and an individual retirement account for the majority of people who are just beginning to explore stock market investing, IRA. You are able to purchase stocks, mutual funds, and ETFs using either type of account. The primary factors to take into account here are your investment objectives and how simple you want it to be to access your funds. A conventional brokerage account is probably what you want if you want quick access to your funds, are only saving for a rainy day, or wish to invest more than the yearly IRA contribution maximum. Although IRAs offer excellent tax advantages for stock purchases, it may be challenging to access your funds until you reach retirement age. 4. Select your stocks. Now that the how-to question has been resolved, here are 5 excellent stocks to get you started if you're searching for some terrific beginner-friendly investment ideas. Of course, we can't cover all you should think about while choosing and analyzing stocks in only a few minutes, But these are the key ideas to understand before you begin. Diversify your portfolio. Earn an investment income through full comprehension. Avoid stocks with significant volatility until you feel comfortable investing. Avoid penny stocks at all costs. It's a good idea to understand the concept of diversity, which states that your portfolio should contain a range of different types of businesses. Keep your investments in companies you are familiar with, and if you find that you are particularly adept at, or at ease with, stock analysis, there is nothing wrong with having a sizable portion of your portfolio invested in that particular sector. While investing in flashy high-growth stocks may seem like a terrific way to increase your wealth, and it can be, I'd advise you to wait until you have some more experience before doing so. Learn some of the fundamental methods for assessing particular equities if you want to invest in them. 5. Continue investing. Here is one of the most important investment secrets, courtesy of Warren Buffett. Note, Warren Buffett is one of the top sources of knowledge for your investment strategy in addition to being the most successful long-term investor of all time. The most surefire way to make money in the stock market is to buy shares of great businesses at reasonable prices and hold on to the shares for as long as the businesses remain great, or until you need the money. This can result in some volatility along the way, but over time, you'll generate good returns on your investments. If you have enjoyed this video and found it useful, please give it a like and subscribe and check out the other videos on my channel that will help you with your investing life. Also turn on the bell notifications so you don't miss a future upload. Thanks for watching and I will see you all next time.